texture is not all that great, and that's weighing on everything. Prakash Diwan is with us to take some questions. Prakash, good to have you with us here. Good afternoon. I mentioned these earnings cuts which are coming through in these consumer names, Havells, Asian Paints, Lever, PVR, of course, from the IT space, maybe L&T Technology Services. Any thoughts? What's going on?
So I think, good afternoon, Prashant. So I think very clearly the market's kind of in that state of uncertainty, and result season always brings this anxiety and uncertainty around, especially when the sector leaders or representatives or the proxies to the sector come up with numbers. So if Asian Paints is going to report numbers that are not so encouraging, and with such a massive PE expansion that's already happened in the last couple of years, there's always room for some sort of a PE contraction or rationalization. So it's nothing very unusual. And the same thing will go for some of the larger names like HUL and all. It's very clear there is a little bit of demand contraction. While input prices have come down, their inability to increase volumes immediately in this quarter and the next is going to definitely weigh heavily down on them. And when money is being pulled out of the large cap names via the ETF routes or even from the actively managed funds, you will see a little bit of a collateral damage in terms of the kind of selling that you will see in some of the heavy weighted counters. So I'm not surprised. And the market probably till the budget's going to be range bound, but with this kind of a bias where anything negative on the earnings or slightly disappointing is going to get punished. So you could probably see that happen as a sector rotation every day when there's a large player. So tomorrow you've got ICICI Bank and Kotak coming up with numbers. And if the numbers are good, probably banking gets a leg up on Monday. But so those kind of things will keep on happening. Great time to relook at your portfolio from a slightly medium to long-term perspective. And if you feel you're not aligned to the sectors that are looking promising and you're underweight, probably do that shift during this time before the budget is my sense.
Your thoughts on HUL? There is that additional royalty which has been announced, but considering that profitability for HUL has not been so bad, do you think they will be able to absorb this increased royalty, or perhaps through cost efficiencies? And considering they've been gaining market share, do you think this dip that we are seeing is a good buying opportunity, or would you wait it out?
Good afternoon, Rima. So I think the dip is the start of a little bit of a softness that could prevail for slightly longer. The trigger could have been probably the additional burden of the royalties. But remember, the kind of acquisitions that HUL has been making in the recent past, they've given a very different dimension to the portfolio. They're no more depending on those low price, SKUs for their volume growth. There's a very significant shift in gears in terms of getting into the higher end or higher price points of their product lines. And that is something, Rima, very clearly, which is going to start benefiting them probably towards the second half of calendar 23. And the cost rationalization and efficiencies that they started off early last year, middle of last year, when crude was at its peak and packaging costs, logistics costs were really hurting, those benefits will continue to be there because the processes have got rationalized, have got more efficient. But you really don't reduce prices just because things get more better or efficient on that one. So that will also work. I think it's a good buy at lower levels for sure. But, don't jump at it just because it was soft for a couple of days. You'll probably get better days to buy into the consumption pack, or specifically the large cap FMCG names.
Just one point about that HUL premiumization and how it's been boosting margins. Prashant, in FY21, HUL's margins were 14%. FY23, margins 16% for the full year. FY16, margins of 18%. And now last year it ended with margins of 25%, which basically means in the last 12 years, margins have gone up from 14% now to 25%, right? That's a significant expansion in the company's profitability. So that's why I asked, right, that now maybe it has within them to absorb this increased royalty because they are focusing so much on premiumization that maybe they will be able to
What
absorb.
was the starting point, Rima? You said?
March
13.
11. So FY11, it was about 14%.
I see.
And now we're at 23, 25%.
I'm just asking that because the big re-rating in Lever coincides exactly with this phase, right? So it was flat from 2000 to almost 2010. 10 years it did nothing. That famous no return period for HUL. And then it started in 2010. To 2010 it closed at 312 rupees. And over the next 10 years, exactly the next 10 years, it went up 10 times. So the performance kind of mirrored that. And I think that is in a way, the recency bias, right? A lot of people think that, well, it's made money, it's compounded money nicely over the last 10 years. So this is perhaps the place to be in a way. But valuations are much richer as compared to, and I will present a piece later at 4:30 on Editors Roundtable on this, compared to average P multiples compared to pre-COVID. A lot of these names, very, very rich in that sense. We'll take a quick commercial break here. We'll be joined by our Alpha Manager, Anand Shah of ICICI Pru AMC, to discuss their top portfolio bets on the other side. Stay with us.
For how long will you continue being tensed about the future? Pension can free you from future's tension. With LIC's new Pension Plus, make your own pension plan, because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension, so that you grow young and tension-free. LIC, हर पल आपके साथ.
आज तबीयत ठीक नहीं लग रही, तुम ही सब काम निपटा दो ना. अरे टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ.
Low emission premium plus by Century ProWood.
Overburdened by your utility bills? Relax. Pay all your utility bills with Canara Bank AI1, the banking super app. Download today, क्योंकि आपके सपने हमारे अपने.
मेरे पास सेलो है, गर्मा गर्म चाय.
सेलो वैक्यूम स्टील की थर्मोसील टेक्नोलॉजी रखे गरम को गरम और ठंडे को ठंडा 24 घंटे. सेलो वैक्यूम स्टील फ्लास्क.
Papa, we should make some copies of our house keys.
Okay.
We'll keep one at the grocery store, then one at the railway station, one outside in the garden, and yeah, one under the doormat.
Are you feeling all right? Inviting thieves to rob the house?
That's exactly what you're doing.
What?
What is this?
My trading account, Pap.
Password or an invitation to wipe out your account. Papa, password secure, asset secure.
You haven't read it, no?
I've memorized it also.
You will forget. Write it down somewhere.
Papa.
सोच कर, समझ कर, invest कर.
What if you were a global bank who wanted to crunch billions of transactions against thousands of compliance controls? So you tap IBM to unsilo your data, and now you can supercharge your audit system with AI. Let's create smarter ways of putting your data to work. IBM, let's create.
पैसे कब लौटाना है भाई? कैशिफाई. कैश कहाँ है? तो मम्मी का पुराना फोन है भाई. अबे मैंने बोला कैशिफाई. कैशिफाई पे जा, पुराना फोन बेच और कैश पा. Download the app now.
When timeless European design meets cutting-edge technology, it's QO. QO, European Bath Lounges.
Indiabulls Commercial Credit Limited announces a public issue of secured redeemable NCDs offering coupon rate of up to 10.30% per annum and additional incentive of 0.25% per annum. Tranche 1 issue is open for subscription. To subscribe, log on to www.indiabullscommercialcredit.com. For risk factors, detailed disclaimer and more details, refer to Tranche 1 prospectus available on the websites of SEBI, Stock Exchange, Company and the lead managers.
Welcome back. It went down to levels of 18,025. It's climbed back, clawed back to 18,050. So in the last 10 minutes, you can see a tick up on the markets now. Still down 60 odd points. But again, there has been a bit of a leg up in the markets. Apollo Hospitals is inched up a tad bit. Again, it's not a big up move, so you really can't see it in individual names as well. But let's talk about Atul Auto. Came out with their Q3 numbers. Looks like a miss. Sonal is here with the fine print. Sonal.
Well, it's Atul Ltd that reported numbers a while back, and it was a miss, of course. The numbers were much lower than what the street was working with. And slowing demand and fall in price is something that impacted revenues this time around. And the margin miss really came in because of performance and other chemicals. So if we look at the overall numbers, revenues declined 9% on a YOY basis. Even on a sequential basis, it is a decline. EBITDA declined by 31%. Margins took a hit of almost 500 basis points. The expectation was of margins of around 15%. The margins have come in at 13.6%. Profits are also down by 34%. Now, as I said, between the two segments, it was performance and other chemicals that did not do so well. But life science chemicals, performance and others, which is actually the smaller part in terms of revenues, there the revenues grew by 24%. In performance chemicals, it was down 19%. Even in terms of margins, the performance and other chemicals took a big hit. Margins there came in at 3% versus 14% on a YOY basis. That is the segmental EBIT. And in life sciences chemicals, it was at 22% versus 11%. So there is where we saw a margin improvement as well. The stock is also not very cheap. Trades at 35 times FY24 EPS, is down 10% year to date so far. And the weakness in pricing and demand is something that continues to impact the stock price as well.
Got it. Thanks a lot for that. Sonal, when a stock trades at more than 35 times and you have margins getting compressed by close to 500 basis points, explains why the stock is taking a bit of a knock. Prakash, what's your view on Atul? The stock is down now. It's seen a sharp dip post its numbers.
Oh, absolutely. You said it, Nigel. I think this is exactly what I was alluding to a couple of weeks back when indications were very clear that the slowdown in Europe is hurting all of these specialty chemical names because there's absolutely no demand. It's so tepid that some of them are actually going to be finding it extremely difficult to report any improvement in revenue or margins. But the side effect of this entire situation is that those who survive this slowdown and have stronger balance sheets are the ones that could probably resurrect themselves. A lot of the smaller marginal players on the fringes would probably get wiped out if this extends a bit. So it's a big a shakeout phase of sorts for the chemical names. But the likes of Atul, Aarti, Deepak, SRF, they have their niches which they've developed so well, and they have strength on the balance sheet to sustain this slowdown. But it is a reality that issues related to raw materials have now, on the supply side, have now actually been substituted by issues on the demand side. So it's time to relook at some of these names and probably re-enter at lower levels if you don't have the heart to see this volatility on the way down.
The market's been up and down. While we've been talking about individual stocks, we were down 85. There was a sharp recovery, and that has also now been kind of sold into at this point in time. There's this name called Hariom Pipes, I think, which is buzzing. It's up to some 12-13%. Prakash, have you looked at this? Have you tracked it?
Oh yes, I think it's one of those few names last year which did well after the IPO and sustained at those levels. And they did an acquisition recently, which is really helped them expand their book. So it's everything's kind of falling in place in terms of what they promised at the time of the IPO, Prashant. And remember, as you get closer to 2024, which is the election year, there is going to be a huge impetus on something which makes a big difference to people in the country, and that's going to be the Har Nal Se Jal Yojana. If that is to be a reality, all your pipe players, especially the ones that are part of this entire network build-up, are going to benefit. Hariom notwithstanding. So you will see that secular change in outlook for these companies, and the softness in raw material costs has also probably been helpful in terms of managing the margins to go back to what the levels that they were comfortably prevailing at. So all of that's kind of been it. It's a good company, well run, smart management, runs a tight ship, but it's a small company, so you need to kind of take it in your stride.
There is this other mission also, Jal Jeevan. that's also driving a lot of sales for pipes companies. I think we were talking to a company called High Tech, and they had indicated that Jal Jeevan is driving volumes for them. But Prakash, thank you very much for that. Let's talk about Chris Wood of Jefferies.